Good morning. It's February the 26th, 2018. Time to kick off another trading weekend day. Hypothetical simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have been overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Well, it is the weekend, and we come in today with equities up, gold up, treasuries up, and the dollar and crude lower. Lots of reasons given for this. Powell testifies tomorrow and Thursday. Tends to hold the market in check. His testimony is supposed to be positive. Current policies will remain in place. 3 interest rate increases for 2018. The 10-year note hit 290 last night and retreated from that level. Some comments from hedge fund managers out there that the bull market in treasuries is about to restart. I mean, I don't know. You always have to have a reason. So the news is scant over the weekend. What happened on Friday is we had strong buying in the U.S. equity markets, and that went around the globe. That one was pretty easy to see. Dollar down, treasuries up. That one's not so easy to see. Dollar down, gold up's pretty easy to see. Dollar down, crude lower is not too easy to see if you look at the historical relationships. So we're going to open with a mixed bag this morning. The news, Chicago National Activity Index up 0.2. No one pays any attention to that. New home sales at 600K. Could come in lower than forecast if it's like the recent numbers out of the housing industry. And Dallas Fed, I didn't catch where it was supposed to be, but the last month it was 16.8. That one could come in higher than forecast. So news focus, major piece of news this morning would be new home sales. Draghi speaks at 9 Eastern, and I don't look for him to say or do anything. I know the European Central Bank would like the euro lower so they can move more exports outside of the EU, but I don't know if he'll address that. But Draghi's probably the source of a news spike, given the lack of other news. So we'll see if that happens. We're at resistance right now. It's 28 to the buck. So I had 27 to 31 a couple hours ago as the sell zone. So we'll leave it at that. Obviously, you'd like to get it done at 31 rather than 27. Then 3 to 7 for sell 2. On the buy side, 20 to 24 and 13 to 17. Hope everybody had a good weekend. The sun finally came out yesterday, and I think we made it to 50. It's supposed to be 60 today, so we're in a warm up. And the sun is 1/3 of its way higher in the sky, so it's starting to look a little bit more like spring. Although that's a little over officially a month away. Kind of has the feel, though, that the worst of winter is behind us. We didn't get much moisture out of that, about 1/4 of an inch. So moisture is still headed north and south of us, where it's kind of right. We get split. Okay, 20 to 24, number 1. Sell 27s to 31s. Sell 3s to 7. I don't see the ingredients necessary for a breakout today to the upside other than short covering. On the buy side, 8 to 12, number 1. 1 to 5, buy 1. 25, 29, buy 2. Looking at gold. Now, when we come in the morning, if we don't have a real strong feeling or don't really know what to do, nobody else does either. And so in those situations, we're dependent upon just, structure and waiting to see what levels are accepted or rejected. Gold had a very, very nice run. I mean, most of it started on Globex. There's the Frankfurt high up there. So we've got a seller at 42. So 40 to 42 will be sell 1. That picks up that area. Strong profile. We want to buy it first to see if we can take out the 42 area. In fact, why don't we just make it 42, 44 so we don't get in trouble. And then got this break over here at 48, 47, 2-letter ledge up there at 49. Last rotate up in the day session's 45, so we'll pick up the 45s with the 42, 44. So we'll make 48.50 for sell 2. On the buy side, the breakout came from 35, so we'll try 35s, 37s, buy 1. 30, 32, buy 2. Okay, the European Central Bank wants the euro lower. And I know every time they go out and make those moves to try to get it lower, it comes right back up in their face. But so they don't want it at 140. They'd rather have it at par to 110. So I don't think Draghi's going to come out and say anything that materially takes the euro higher, but you never know. He talks at 9 Eastern. So last trade's 40, so we'll make 50 to 60, sell 1. 75, 85, sell 2. On the buy side, 23 even, 23.10, buy 1. I'm going to put a question mark at 25 because right there. And then we'll make 75, 85, buy 2. I'm opening it up a little bit to the downside because my guess is that the Draghi's not going to come out and say anything that'll take the euro higher. So that's why I'm giving it more room on the downside. But we'll have to see how she plays. It doesn't guarantee that it'll happen. Structure says you're buying in the 23.25 area. Crude oil is lower. With the dollar lower, used to, I would almost guarantee that the crude oil would be higher. This is based on, again, 2 hours ago, so crude actually does look like it's trading higher. This morning comparing it to Friday's close. So it looks like we are trading higher. So got enough to get over 64, so 64 and a quarter, sell 1. 64.50, 75, sell 2. And we'll put a question mark at 63.75. Looks like we're trying to trade higher here. On the buy side, 25 to 50 on the assumption that we're trying to trade higher first this morning. And then 62.75, 63 by 2. To the Emini. Really no significant news overnight. The strength in Asia and the EU would be follow through buying from the strong close that we had on Friday. But it looks like, and another push up in K periods. So if we go back structurally, let's look at you can see we've got this pretty clean break up here at 70, 72, and we're through the 55 break here on a bar chart. Looking at the F1 screen, it gives you a little bit different picture. Got this little 2-letter ledge right here, and these are 5-point increments, so there's rounding errors. We've got this little 3-letter ledge there. So starting at about 72, the selling picks up, and if we go to the F2 screen and scroll back, if we get through 55, we've got this 62, 63 area. We got that low right there at 50, say 56, and we got 62. So the 62 area, then basically 72, and then we have the spill from 81. So there's your 77, there's your 72. That spill from there is 66, and then we have that high right there at 63. So 63 to 72 is pretty good resistance, and I think we have a shot to get up and test the 62 area without any problems. So we'll make 64, 69, sell 1, and 74, 79, sell 2. But 63, 72, 76, and 80 off the charts are where resistance is. On the buy side, we like the buy side first, so we'll make 55, 53 by 1, and that's 53, 55. We'll make 51, 49 by 2, and we'll see what happens. Giving it room on the short side because the market wants to trade higher. We've got our points. And we'll get out there and we'll see what happens. It'll take a bit to get everything up and published. Going to get busy on that. Back with you as soon as possible.